So this isn't really at all about crypto. However, it makes me think of why people might flood into crypto, different parts of the world, different times, when it suits them. Like, oh my God, I'm panicking because something is happening in my country with its currency, whatever, financial system. I'm nervous. I want to do something with my money to save what wealth I have. Crypto, right? It's what I think about. But this really isn't about that. Zero hedge. The bubble's revenge. China's stock market is littered with pledged share landmines buried deep in the 2015 mania. Via Investing in Chinese Stocks blog. Back during the 2015 stock market bubble, many investors and companies pledged their shares for loans. Standards were low at the time. In addition to taking insanely overvalued shares as collateral, banks also loaned money against shares that the owner didn't have the right to sell. Here's a post I wrote nearly 3 years ago, back in July 2015, detailing what I thought was the craziest example. And the link is this peak insanity? Blanket company with PE, or price to earnings, of 6,000 pledges 30% of shares as collateral. A blanket company had a PE ratio, of 5,800 at the peak. Shares have plunged, but the PE is still above 3,000. Shares fell more than 60% from their peak. This week, they were limit down on Monday, halted for 3 days, and limit up on Friday. That's like circuit breaker stuff, okay? Can't trade that. It's done. It's finished. Too much volatility, whatever the reason. Just in case you think the PE ratio may be distorting things, the price to sales ratio is above 70. Debt to assets is 23 times. Price to book 159 times. By itself, this is crazy enough to show how the bull market was an indiscriminate, liquidity-driven, momentum trader market. But this is not the end of the story. Never-ending story. Reuters, China's companies at risk of stock-backed loan recalls. Chinese companies that borrowed money using shares as collateral may have to put up more assets or repay their debts, carrying the ripples from the stock market plunge into the wider economy. A near 30% collapse in share prices has started to endanger some businesses using such financing, and the country's banking regulator said on Thursday it would let financial institutions renegotiate lending terms in these circumstances. Bank and other loans backed by listed shares officially increased around 260% in May to 58.4 billion won, or $9.4 billion, from a year earlier, representing about 4.8% of total social financing for the period. There is no doubt all the companies are facing a financial dilemma, said Zhang Zhihong, board secretary at Hubei Landing Holding Co. Ltd., a textile company that suspended its shares from trading on Tuesday. Roughly half of all shares on mainland bourses are now suspended after its stock fell 61%. Hubei Lending, that's not Hubei, like the exchange Hubei, no. Hubei Landing was 29.9% of its shares, has 29.9% of its shares pledged as collateral for a loan from a trust company. The stock trading under the symbol of Hubei Landing is now called Gosun Holding, after acquiring Gosun Technology in August 2015. Shares are at the new post-2015 low. More importantly, the financing dilemma is back for many companies. Already, more than 10 companies have run into trouble this month. That may be far from the worst of its 98% of A-shares companies have pledged shares. Some major shareholders have pledged 100% of their holdings, while other companies have more than 70% of outstanding shares pledged. In fact, judging from recent years, this landmine of equity pledges was buried in the bull market in 2015. At that time, the stocks in the entire market soared. Many shareholders who did not have the necessary conditions for reducing shareholdings used the stock pledge to finance and increase leverage. This became a direct incentive for the rapid development of the A-share stock pledge business at the time. Now I want to stop for a second because I saw a documentary fairly recently, and now I can't remember what it's called, the China Syndrome or something like that. Let me see if that was right. The China syndrome? No, that's 1979. Gosh, I don't remember what it was called, but I did a video after I watched it. And I told you guys about it. I was like, oh man, you should go see this. And I watched it at home, watched the documentary at home. And it was about these companies that don't really do anything. They're pretty much shell companies in China. And then when the American investors come over, they turn on all the lights, get the forklifts running, get the trucks in and out of here. And then when they leave, they shut it all down again. And they had to set up, this guy set up security cameras across the street to watch one truck coming in all day long, one time. And he's like, for this kind of money that they just raised, for what they said they're doing, we should see a line of trucks all day long nonstop. We saw one truck come in all day. And again, then when they knew the shareholder or the investment company's coming over to take a peek, they hire a few people, they make it look busy. And he's like, it wasn't just that company. And then he started at the end of the show, started talking about Alibaba. I was like, well, that's interesting. But long story short, it made me think of how many companies are out there. They're nothing. They've taken the money and they've run. They don't do anything. They don't really produce anything. It's nothing. They took their loans, got their loans, and that's it. So as I hear this, what I'm reading to you, it makes me think, how many of these companies that we're even talking about here might be some of those? Anyways, from the perspective of the pledged ratio among the 3,453 A share companies that have pledged their stocks at present, there are 1,250 listed companies with more than 20% of the pledged shares, accounting for 36.2%, and 129 listed companies with more than 50% of the pledged shares. Among them, 51 listed companies pledged more than 60%, and 10 companies pledged more than 70%. Among them, the proportion of pledged stocks of Tibetan Song is 78%, ranking first. The top 10 companies by pledged shares, which they show, but it's in Chinese, so I don't even need to show it to you. Earlier this week, Zhongnan Red Cultural Group saw its shares halted. Nanfeng Ventilator is in the midst of a stock pledge crisis, and its largest shareholder and chairman is missing. Where'd he go? We don't know. Wonder if he's running one of those kind of companies I just told you about. Gone. And he's gone. On June 12th, Nanfeng Co. Ltd., referred to as Nanfeng Shares, issued the announcement on the progress of the missing chairman related issues. He said that on May 3rd, he was informed of the company's actual controller and chairman, Yang Zhishan, lost contact and has not yet obtained contact with him. Loss of association, restructuring failed, the company's multiple accounts were frozen, and the chairman's pledged stock was taken. Nanfeng's shares have yet to come out of the shadows of the dark May. I guess it's probably a what do you call it? Translation, like a Google translation or whatever. According to the announcement, as of the announcement date, it was initially understood that Yang Zhihan's personal borrowings excluded stock pledges amounted to approximately 360 million yuan without involving the company. And there may be a debt amount of approximately 380 million yuan in the name of the fraudulent company as a borrower or guarantor, not yet verified, and other personal debts not involving the company. Exact amount is unknown. So what was that last part? Fraudulent company as a borrower. Huh. Starting to make that connection that I just gave you a second ago about that documentary. And I can't think of the name of the Chinese something or the China. It wasn't China Syndrome because that's a 1979 movie. It was interesting, I'll tell you that much, to watch it. The article puts some value on the pledged shares. As of June 12th, 129 listed companies have pledged more than 50% of the total share capital. According to statistical data, the stock pledges of the controlling shareholders of 404 listed companies have hit a closing line with a market value of RMB of 328.9 billion, which is the renminbi, whatever. There are 86 listed companies with a market value of more than 1 billion yuan pledged by controlling shareholders, and 9 companies with more than 5 billion yuan. Industry insiders told the China Times reported that the stocks held by the major shareholders and actual controllers of listed companies have all limited time for sale, and they cannot realize real-time liquidity. The equity pledge model has become a fascinating channel In the field of listed companies, it is not surprising that major shareholders or actual controllers complete cash financing through equity pledge. The problem is that the risk is relatively large. The amount of financing with certain discounted proportions is financed through the market value of the pledged equity. If the stock price fluctuates, there may be a series of risks, such as the inability to repay the principal due to pledge of equity. Shares are experiencing flash crashes as a result of this landmine risk. No stocks and no deposits. 98% of A-share companies pledged. Judging from the characteristics of the current market, whether it is the stock price drop triggering the risk of equity pledge closing, such as the South China culture, it still triggers a real closeout behavior such as Hui Jingqing, whatever. The stock price flash collapse second quarter. In equity, the relationship between pledges is particularly close. They show some charts, doesn't really matter. Why? Because it's an effing bloodbath over there. Pledging shares is a way to obtain cheap financing. What could go wrong? The equity pledge has the advantages of low cost, high efficiency, flexible business, and wide source of funds, which has become an important reason for the high enthusiasm for equity pledges in recent years. At the same time, investment bankers also told reporters that the prevalence of equity pledges, in addition to the relevant shareholders of the assets of the bank's assets, but also with the background of bank tightening, some projects cannot achieve loans. Loans have reached limits and other closely related. This makes the relevant shareholders more willing to finance through equity pledges. In fact, judging from recent years, this landmine of equity pledges was buried in the bull market in 2015. At that time, the stocks in the entire market soared. Many shareholders who did not have the necessary conditions for reduction used the stock pledge to finance and increase leverage. This is kind of like BitConnect. We're going to take your Bitcoin. We're going to trade with it behind the scenes. You can't see what we're doing. We have a coin called BitConnect. That's not on any exchanges. So we created our own exchange. And then we traded it ourselves. And we ran the price up, of course, because we controlled the damn thing. But you look back and said, hey, I've got this BitConnect worth $300 a piece. Can I get a loan on this? You know, this is kind of the equivalent. I'm just giving you a little analogy here. Can I get a loan? You see what my BitConnect's worth? And hell yeah, you're going to pledge that for your, collateral? Yeah, here you go. Have a nice day, sir. Thanks, I'm going to run this business now. And then what happens to BitConnect? Goes down to nothing. $1, $10, $3. Oh my God. Speaking of which, coin market cap. Is BitConnect even listed still? Yes, it is. What is the price? Huge. And I mean huge volume. $218 in the last 24 hours. 500, there's 1,000. And the current price is 49 cents. All-time high was over $400. Looks like 437-ish. That's the equivalent. You're going to pledge that stuff when it was $400. And when the creditor needs it, it's worth 49 cents a piece. Oh! Nice little analogy, isn't it? So anyways, this can't possibly end well for China. And there's a lot of companies involved. And I'm here to tell you again, this fraudulent company, there's a whole lot of fraudulent companies. And they like to peg, in this documentary I was telling you about, one of the scenes was like one company pledging this metal that they had, you know, like scrap metal kind of a thing, but they had these big pipes or something. I'm trying to remember. Some kind of thing they were pledging. I want to say it was like pipes or something. And as collateral. And they got the loan. And then another company, completely not related, needs a loan. We need some collateral. Oh, we've got these pipes over here. You know, you can scrap them, whatever. There's value. Okay, so they get the loan off that. It's the same effing pipes. They were both using the same pledge. The same pipes, two different companies. Why? Because they're probably friends. Whatever. I'm telling you, there's some major fraud in China. There's stuff that goes on in China that you just can't even imagine. So I'm hearing this stuff, and I'm thinking of that documentary I saw, and I'm kind of like, Whoa, wait a second. This is going down. It's not looking pretty. So, over in China, wanting to move some money around, we're nervous. A whole hell of a lot of people in China, in case you didn't know. Maybe a fraction of them might run over into cryptos when the going gets tough and the tough gets going. Maybe. We'll see. Take care.